Wings up, everyone. Wings up, wings up.
Wings up.
Wings
Wings
up.
up,
Wings
wings
up.
up.
Yeah, you got the wings up, wings up. Happy Wednesday to everyone on the call today. Glad to see everyone there. Glad to see you all here today. All right, all right, all right. We're back at it. I'm going to go ahead and get started on the call. I have a couple of things that I definitely want to share with you all on today, and I'm excited about today's call, guys. I'm excited about today's call, guys. Remember, we're doing a lot of pivoting right now, which is great because right now we're just kind of getting into our flow of what's working, what's not working, and how we can shift. Okay, so today's topic is going to be about the hook, line, and close. This is one of the things that we really need to start practicing as it relates to getting in front of deals and closing, learning how to hook, line, and close. This is a sales technique that we've used over the years as sales professionals. And I know some of you all on the call today is familiar with the hook, line, and close technique, which is really just mastering the art of conversion. Okay, this is how we get clients in and at an increased speed or an increased conversion ratio. Okay, and I think that's what people are really trying to kind of find their way and get their grips and say, hey, how do I get my clients in? How do I get in front of the clients that I really need to get? How do I make some money? Right? How do I make money? And that's what this is about, okay? So you guys know that we have a plethora of different products and programs that we offer. Okay? We have a plethora of different programs that we offer. And so what you have to learn is how to utilize these programs interchangeable with one another. How do I use these programs, alongside each other and make it work? Okay. Because some ways, okay, some of you all were on the GCA calls, you were doing the GCA programs, and you were trying to figure out how to get in front of clients for the wellness. Well, that's still our focus. Our focus is still wellness. We want that residual money, right? And our focus is still setting up agencies. We still want that residual clientele. But there's different ways to get in front of these clients. And one of the ways is through the hook, line, and sink technique, or hook, line, and close technique, which is just simply, once again, mastering the art of conversion. Okay. So just remember that sales is a psychology. It's a psychology. It's not pressure. Okay. Sales is a psychology. It's not pressure. So hook, line, and close, what that does is give structure to the actual persuasion of what you're trying to accomplish or what you're trying to get across. So sales is a psychology. It's not pressure. So this technique of hook, line, and close is what gives the structure. Okay? It's what gives the structure. And so this technique is a time-tested approach that mirrors the psychology of attraction. It mirrors the psychology of engagement, and then it mirrors the psychology of conversion. Okay? So in the sales world, every conversation has a rhythm. Every conversation. Every conversation has a rhythm. So the hook captures the attention. The line builds the trust. Okay? The hook captures the attention. All right? It captures your prospect's attention with whatever offer, with a powerful offer. Okay? And the line is what guides and educates them toward the solution. Okay? So the line builds the trust. Not only does it guide them and educate them toward the solution, it's the trust building part. So the hook captures the attention, the line builds the trust, and then the close seals the deal. What is the close? That's when you deliver a confident solution or proposal that seals the deal for them. All right. So this strategy that you're going to learn is once again called the hook, line, and close. All right. So we all use some sort of hook sometimes, even when we're making a phone call. But there's 4 reasons sales professionals prefer this strategy, guys. Okay. The first reason is that it captures attention quickly. It starts off extremely strong with a clear emotional why you need to do this. Right? So the hook, line is and close, it captures the attention quickly. It starts strong with a clear emotional why. Secondly, it builds the connection and the trust. So by using this technique, you're capturing the attention quickly, you're building the connection and the trust, and it provides a predictable framework. It simplifies the complex, or it simplifies the sales cycle. Why? Because you're doing things like add-ons. These sales are interchangeable. It's all working together. And number 4, it boosts the conversion ratio or the conversion rates. So what it does is it moves the prospects naturally, without force, from curiosity to commitment, and they don't really know it, right? And so we're going to give you some examples today on how you use this technique and which product we're going to use this technique on, okay? So this product, once again, is the hook, line, and close. I want you guys to remember that. The hook, line, and close. These are different sales techniques that you guys have been learning over the years. I know you guys can name some of the other ones, but here's a new one. This is the hook, line, and close. All right. This is the art of persuasion. Okay. So the hook in this particular instance, right, we're going to use for our product is the MCA Bailout program. Okay? Remember where we're going and what we're seeking to accomplish. Through all of our training, I keep wanting you to remember we want the residual piece. We want the employees. Okay? Do we want the funding? Absolutely. But we're going after, our objective is to go after the employees, the wellness plus. That's what the ultimate goal is. So you see this hook, which is the MCA loan bailout program. Okay? So we're going to lead with relief. We're going to lead with relief, and we're going to speak to the pain that they feel right away. And that's the strong hook, right? So the MCA bailout program is going to be our attention grabber. It's the lifeline for business owners stuck in high-cost merchant cash advances. You guys know about those merchant cash advances? If you don't know about them, I'll tell you about them. These are loans that's based on daily and weekly balances. Okay. These loans basically, these loans are basically daily payments. So people that take out these loans have to make the payments every day, or they have to make the payments every week. So people that's maybe trying to make payroll, things like that, and they really need an emergency cash, they take out MCA loans. This is big business, guys. So it's a ton of people out there with MCA loans. Ton of people, a lot. Okay. I've made a lot of money in the MCA space. All right. So there's a lot of customers out there with MCA loans. So what is our hook? Our hook is we don't just refinance debt, we rebuild cash flow and help businesses reinvest in their future through the wellness program. Okay. So the MCA loan bailout program, guys, this is a program that you're able to offer right away. All right. So it's officially has launched right now. It has been officially launched, and the program basically pays off your MCA loan on your behalf and converts those payments, those weekly payments and daily payments into a fixed monthly payment structure that's stretched over like 5 years. Okay, so you think about all of these people with MCA loans, all of these businesses that has gotten MCA loans. This program here buys their MCA loans from them. Credit is not a score. Credit score, sorry. Credit score is not a factor. You get to replace the daily or weekly payments with one low monthly payment. You get up to 5 years term with no prepayment penalty. You're going to obtain instant relief from high interest rate MCA debt. Listen, they hate those payments. You're going to restore your cash flow and your peace of mind. They hate these loans. So this is not going to be a hard sell for you to show them, hey, I have an MCA bailout program where we actually buy your MCA loans. Okay? Can we buy them out? Absolutely. Do we want to do that? Absolutely. But more important, how many employees do you have? You guys with me? We're in the door now, right? We're in the door because we've hooked them with the MCA loan program. So we're going to lead out with relief, and we're going to speak to their pain right away. Okay? So how do you speak to their pain right away? Well, listen, every business owner with an MCA loan feels like they're being squeezed. They feel like they're under pressure. The MCA bailout program is the hook because it promises the relief. See, we're not selling a loan. We're selling freedom from daily payments. We're not selling funding. We're selling freedom from stress, freedom from cash flow problems. That's the hook, right? But I want you to keep in mind, how many employees do they have? Because you're in the door now, right? You've put the MCA on the end of the line, on your fishing line, and you've casted your reel out into the sea now, right? And now you got all type of people that's like listening and saying, "Whoa, MCA bailout program, that's different." And credit score is not a factor. Think about it. They're already paying. Now they have to be current in their payment. That's another thing. They do have to be current. They can't be behind in the payment. So the lender is looking at this already, like if they can afford a crazy high rate daily payment loan, we don't care about that credit score. If they've been in there paying that, we don't care about that credit score. We'll give them a monthly payment because they've been consistent with making daily payments on something as atrocious as this MCA, funding loan. Okay, so every business owner with an MCA loan is feeling like they're being squeezed. They're feeling like they're under pressure, right? So we have to focus on the benefits of this. So there's 5 key benefits that the MCA bailout program offers. Number 1, it offers debt relief and payment reduction. So it's going to cut those daily MCA payments by 60%. That's money going back into this company's bottom line, and it's changing their flow of payments so they can keep their money in their pocket for a longer period of time. With daily payments, they got to get rid of that money daily. They don't see it. They make money that day to get rid of it the same day. Okay? So they can't leverage properly. But they couldn't get approved for the loan in one lump sum because they either had credit issues or whatever the case may be. But the MCA lender says, no, well, I'll give you a loan based on your daily and your weekly receivables. Well, they've shown history of making these daily and weekly payments, which are, notorious. The lender doesn't care anything about the score now because you've shown your ability to be able to make these big payments every day. Genius, right? So what it does now is also restores the cash flow. It puts real working capital back into the business. Okay? This MCA bailout program puts real working capital back into the business. Number 3, it's flexible. It has flexible repayment options. Okay? Number 4, it's got credit rebuilding pathway. It builds trust with lenders and vendors now. Because what happens is with the bailout program, you actually get a clear slate with those lenders because your loan just got paid off. So it actually helps you. And then number 5, this program gives you access to the Wellness Plus, which converts the savings into employee benefits at no net cost. We're showing how to convert these saves into employee benefits at no net cost. So we already know that these companies that's taking out MCA loans, they're strapped for cash somewhere. So being able to talk to these companies about putting cash back into their bottom line on top of giving them a bailout relief, it's not going to be a hard sell. So instead of going out looking for wellness clients, look for MCA bailout clients. Look for MCA bailout clients. So we're going to target these MCA customers, okay? So we can give them relief and also give them wellness. All right? So we need to use the benefits and not the features, right? So we want to paint the picture. We want to paint the before and after picture with them. Okay? We want to paint the before and after the pictures with them. So before the bailout, they was drowning in daily payments, daily withdrawals. Look at some of the industries. Look at some of the industries: restaurant industry, construction, retail, transportation, fitness, and beauty, right? So before the bailout, these people in these industries were drowning in daily withdrawals. That's the picture you want to be able to paint with them. And after the bailout, these same people now are now able to breathe again. Okay? So now they got more cash in hand, they got a fresh start, right? So the goal is to make them see the transformation here, okay? Before you talk about the numbers, the goal is to see the transformation here. Mr. Customer, I can get you out of these daily payments and put you into a 5-year monthly payment structure. Credit is not an issue. I know that I know that you want a low, and then get you a lower payment. We'll cut your cost by 60%. I'll also put up to $1,000 per employee back into your bottom line every year. You'll start seeing those savings month after month, with giving you some IRS FICA tax credits that you probably didn't even know that was available to you. So we're going to add that to this program as well. And then on top of that, we're going to give you some additional coverage for your employees. You guys have a wellness program, correct? All right, we're going to give additional supplemental coverage and no net cost. So I'm going to put all that together for you under one package and get these numbers back to you. How many employees did you say you had again? Okay, so now these industries that's already engaged with these type of loans are going to want to hear everything that you have to say. They might not want to hear what you have to say about the wellness if you went through the door talking about wellness. So these industries, okay, average employee size for a restaurant is 15 to 30 people. So the common use for MCA in that industry is working capital, supplies, and payroll. So these are the type of things that you have to know when you're speaking to them, all right? Right? You're going to give them relief because they're typically looking for working capital, supplies, and payroll. Developers, construction companies typically got 15 to 25 employees, and they're project bridging. They're looking for materials. They're looking for gap money to finish projects. Okay? Retail, e-commerce, 5 to 20 employees. These are all the industries that you want to target. Transportation, 20 to 50 employees. They typically use this money for fuel, repairs, and cash flow gaps. You see where I'm going with this? So even from a wellness standpoint, you remember you're looking for wellness customers. You guys get $15 per employee. Okay? And if you just targeted restaurants, if you look at it this way, you targeted restaurants, right? If you target those restaurants, especially the people with MCA loans, and you're getting them out of MCA loans, and you don't necessarily have, I mean, for those of you all that just want to, continue to, sign up people for the wellness, it's kind of like the numbers of, the average employees, because these people are easier to talk to. Okay? Even though we're pivoting and we're doing agency setups, these people still exist, all right? And they're easier to talk to speak with. Okay? Remember, you get to 1,000 people, that's $15,000 that you're making per month just on wellness. Just on wellness. I mean, think about it. So just do the math and just repeat this process over and over. But now you're getting in front of customers in another fashion. Instead of going through the door and you're saying, hey, you know what? I'm in the wellness industry. I'm here to save you some money, put money back into your bottom line, which is all good. You can talk to them from a compliance standpoint, which is what you all were taught and learned as GCAs. You can still do that. All of that's still good, but here's something else you want to add into your repertoire. Now you can talk to these people about bailing them out of their MCA loans, and you're using the wellness as an add-on. Your hook is the MCA bailout. And these are the industries that typically use it: the restaurant industry, construction industry, retail, e-commerce, transportation, fitness, and beauty. Okay? These industries experience frequent cash flow challenges, making them prime candidates for MCA relief and wellness integration. They all have employees. Y'all with me? Okay.
Yes.
All right. So they all have employees. So this is an easy entry. Target them. Target these customers. Okay. Because all you need to do is take a small company with 10 employees, and do that a number of times. Do that 100 times. Okay. Some of these people got 30 employees, 35, 50 employees. Okay. So you just got to know, let me go back. You just have to know who your ideal targets are. Not everybody will qualify for this. Not everyone will be interested in this. Okay. So we're not fishing in the ocean. We're fishing in the right pond. We're not fishing in the ocean. We're being intentional where we're fishing, and we're fishing in the right pond. Okay? So where's those ponds? The ponds of the restaurant industry, the ponds of construction, the ponds of retail and commerce, the ponds of transportation. These are intentional ponds. Logistics, retail. These are all what they call hot zones. They already use MCAs, and they typically house anywhere from 10 to 50 employees. Okay, so what does that mean? That means that they're a perfect candidate for both the bailout and the wellness combo program. That's what this is. Okay, this is the wellness and bailout programs. This is the combo program. All right. So the line is the Wellness Plus program. The line is the Wellness Plus program. The hook is the MCA bailout, but the line is the Wellness Plus. So the line here is where you build your value. It's where you turn financial relief for these clients now into employee care or company profitability or retention increase. You get to show all of those things now because you hook them with the MCA bailout, and now you're adding this. You're not asking. This is not an option. When you do the MCA bailout, this is not an option. You're going to assume that this automatically is going to be added unless they say anything different. You're just going to explain that this is two different things that's being added for them to benefit them under one umbrella. So the line is the Wellness Plus program. This is what we're using as the line. This is the value connection. So once we restore the client's financial footing with the MCA bailout, we then introduce the line. And we introduce this next win not as an option or us asking, do you want this program? This is included with this wellness or this MCA bailout program. It's included. Okay? So this is an add-on. All right? So this is going to provide these clients with an additional savings up to $1,000 back into their company bottom line. You think they're going to say no? Absolutely not. they're in the vein now of saving because you're already saving them from the MCA bailout. Now I'm going to save you some additional money up to $1,000 per employee. Think about the number of employees that they have. Okay, think about if they had, just 50 employees, and you was able to save them $500 at 50 employees. That's an additional $25,000 that you're putting back into their account. So now you can cost justify all the money that they've been spending and taking out of their business for MCA payments. Now I'm going to put that back into your bank account by way of savings or utilizing these IRS FICA tax credits. Are you all with me?
Yep.
Yes, coach.
Okay.
Yes, sir.
Yes, sir.
All right.
Yes.
So this is going to be the add-on. All right. And then we're going to include additional coverage at no net cost to you or the employee. This is the add-on. We're going to give you accidental insurance, accident insurance. We're going to give you critical illness. We're going to give you hospital indemnity. These are things that you can choose from for free under this wellness program. Okay? Because you qualify for that. How many employees did you say you had again? 50? All right. So then you get to show them that, that means that if you've got 50 employees and we're up to $1,000, you could potentially be overspending in your FICA tax, payroll tax. I'm sorry, payroll taxes. You could potentially, and you want to be sure that you're careful with your words, okay, guys? We don't want to get ourselves in any legal trouble, but you can potentially be overspending anywhere up to $50,000 annually in payroll taxes. So not only, and you have to make it hurt. Not only are you in an MCA loan right now doing daily or weekly payments at and astronomical interest rates, but you also could be overspending about $50,000 a year that you don't have to spend in payroll taxes by not utilizing your FICA tax credits properly. So we're going to put all of this together for you under this program. No one is going to tell you no. And you're still getting paid the same amount that you were getting paid. We're still doing the same thing, same process. You just sold them on both of these at one time without asking. We're using the assumption rule. I'm assuming that you're going to do as I'm asking on this. Until they say anything different, you just assume that they're going to move forward with what you're offering. Okay? So this is where you build value at. This is where you build value. Okay? So once these clients are hooked by the financial relief, you connect the line. Once you have them on the hook with the financial relief, you instantly connect the line. You don't connect the line and say, oh, by the way, I have another product that you may be interested in. And no. Oh, by the way, your conversation should be, oh, by the way, there's some FICA tax credits I'm going to get added to your account as well. So we're going to knock off up to $1,000 per employee in your payroll taxes. We'll take care of that for you as well. That's under what's called our Wellness Plus program. Okay, so that's how you do it. We're not asking, we're putting it in there. All right. You guys have a wellness program. Great. We're going to give you some additional supplemental coverage. You don't have to change. We're going to give you some additional supplemental coverage. This is all under this one program. You're already approved for this. As long as you have 3 or more employees working over 30 hours a week, you're already pre-approved for this. We're just adding that in for you. You'll get things like accidental death insurance, critical illness, hospital indemnity, life insurance, telehealth, and mental health coverage. So these are the things that's going to add measurable value to their company and their company culture, their retention, and their satisfaction. Bottom line, this is the type of stuff that you want to be able to tell them and let them know. Okay, so how powerful is just to be able to tell them that once they're hooked on the by the financial relief, and you got them on the line. How powerful is it for you to be able to tell them and say to them that this costs you nothing, and it gives your employees more? How powerful is that? This is not going to cost you anything, and it's going to give your employees more for the wellness. Now, of course, the funny part, there's fees involved there, okay? But they're not going to care about that either. They won't care about that either. All right. So these IRS FICA tax credits, all right, this is your leverage. Now you have to look at FICA tax credits as your leverage. You have to keep these FICA tax credits in your back pocket, put it in your wallet, put them in your purse, so you can pull them out when you need to spend them. You have FICA tax credits in your wallet, in your pocket. You got a bunch of IRS FICA tax credits in your purse. Okay? What does that mean? That means pull them out when you need to pull them out and spend them and use them and leverage. This is the leverage. These IRS credits is the leverage. Okay? Wellness Plus qualifies employers for IRS FICA tax credits. Okay? The Wellness Plus qualifies employers for the IRS FICA tax credits. All right? All right? And that offsets the cost. And that's what's creating a true no net cost benefit. Why does that matter? Because it reduces the payroll tax liability. And listen, these people that has these MCA loans, a lot of times they're getting this for payroll reasons, trying to make payroll. So if I have an MCA loan trying to make payroll, and I'm coming to bail you out of this daily payment, this trap, right? And on top of that, eliminating a great deal of the payroll taxes on the payroll liability that you've been trying to fight in the first place. This is a win-win. It matters because it's going to keep more money back into their business. Not only are you putting money back into their business on a daily and weekly basis and on a monthly basis, because you're cutting their costs, and you're also cutting their frequency of cash disbursement. Okay? It allows them to keep more money back in their business. Okay? And then it strengthens your close by showing real financial returns. You can show them their ROI. Look what's back into your account. Look what you're putting back into your business. Look how we're stopping, your daily or weekly, frequency and payment and cutting your costs by 60%. Okay. So your leverage is the FICA tax credits. You got to keep these credits in your pocket. Y'all gotta take these. You gotta take these credits just like you take your credit card with you and stuff like that. Put them in your pocket because you don't know the conversations that you're gonna come across where you get to pull some credits out. If I could say, hey, you know what? I got some FICA tax credits I can actually get you guys get applied to your business and whatever conversation that is. You know what? I can help you guys out, put some money back into your bottom line by getting some FICA tax credits added to your business. Do you have employees? Oh, I can help your retention out by actually getting some IRS FICA tax credits added to your business. That's the leverage, right? Okay. I can help your bottom line profitability by adding some IRS FICA tax credits to your business and take so you can take advantage of some of these savings. It matters. So that's your leverage. The tax credits is your leverage. Okay. Most business owners, most business owners hesitate when they hear benefits, right? They assume that it costs. This is where you hit them with the leverage. This is where you hit them with the leverage. IRS FICA tax credits. These credits offset the program cost, making it a true no net cost benefit. Okay? So most business owners hesitate when they hear benefits. They assume that it costs. This is where you hit them with your leverage, okay? Your IRS FICA tax credits. That's your leverage. These credits offset the program costs, making it a true no net cost benefit. That's going to turn their hesitation into interest, right? Let me ask you all a question. Who's had a client say, I can't afford benefits? Or, what if you could, if they said I can't afford them benefits, it's too high, right? I can't afford that. I can't afford that program. It's too high. What if you can tell them that you don't have to? The IRS will help you to pay for it. That's how you have to use those credits as a true benefit. Okay? So how does this work? How does it work? So in this scenario, under this program, each rep will earn 30% commission of what G2 Global's program fee is. 30%. That would be under the Bailout program. Okay? Each rep would get 30% of the G2 Global's program fee. All right? And then you also going to get $15 per employee every month. Is that good news? 30% of the commission of what G2 Global earns on the Bailout. Okay? And then $15 per employee every month on that one customer. And that's just you going out there bailing out people from MCA loans. This means that every client that you close pays you today and it continues paying you every month with no extra cost burden to the client. That's the leverage. That's the power of leverage and leveraging. Okay? So, let me do some math here. Okay, so here's the scenario. So let's take a company with 35 employees. And they've got $100,000 in MCA loans. All right. Some companies, some people have way more. And some companies may have less. But just say they've got 100,000 in MCA loans. Our G2 fee is $6,000. Say G2 makes 6,000 off of this, right? At 6%. You're going to receive a one-time payment of $1,800 one time, and then you're going to receive $525 in this scenario every month, which is $6,300 a year. So a total 1 year earning off of this one client is $8,100. Okay? Just billing this person out. That's one client. Imagine you having 10 of those. Imagine you having 20 of those. Okay? So, say somebody only got 50 employees. So now you're only making $900 a one-time payment. Okay? So you just do the math. Just do the math. What I'm showing you is how to fish. We're still ending up with the same goal, which is the residual, the wellness, what you've been learning, what you've been training about. This is what you've been training on, right? Okay? So I'm showing you a way to get you in the door utilizing a hot program and bailing people out of those MCAs. Your goal is how many employees do you have? Okay. Some of them, you may get some that may only have 5 or 10 employees. That's okay. You'll still make money from the MCA loan. You still make money from the 5 or 10. These are just easy, easy peasies. Throw them in. Keep doing it. Stay there. It might take you longer, but it'll be easier. You may get there quicker than the person that's going after the companies with the 500 employees, where you've ran through, 20, 30 companies that got MCA bailout loans that really need to get bailed out, and you using the wellness program as an add-on. Do not ask, do not suggest that they take the wellness piece. Do not ask if they're going to take the wellness piece. You're going to tell them that they're going to take the wellness piece by saying, in addition, what we're going to do is, okay? In addition to bailing you out, what we're going to do is also give you some additional FICA tax credits so we can offset some of what you're spending on your payroll taxes through our wellness program. And then we're going to give you some additional supplemental benefits too as well, included with this whole bailout program, okay? All right. Let's go ahead and get you started. And then we'll deal with this in stages now, okay? But that's the hook, the line, and then it's the close, right? So the power of the combo, what it does is it shows synergy, all right? The programs make each other stronger. These two programs together make each other's program stronger. The wellness program makes the MCA buyout program stronger, and the buyout program makes this wellness program just that much stronger too. I want to take this a step further. That a lot of these clients that you're going to build out still needs funding. They still have plans. Okay? So even after you bail them out, and even after you give them the wellness program, this is the client we need to know what's next. What do you have? What are you still working on that we can help you with? Okay? So the power of this combo is a beast. Okay? It immediately offers cash relief, cash flow relief. So MCA bailout. It offers ongoing financial benefits with the Wellness Plus savings and coverage. It doesn't cost the company anything. There's no net cost to the company or the employees for the wellness program. Of course, the MCA bailout has a fee to it. That's going to cost. It's a loan. It's a bailout. But there's no net cost to the program for this wellness piece, right? And there's IRS tax credit advantages. And then there's a residual payout to you. So you guys want to build up your residual payouts quickly? Go out and start targeting now companies that have MCA loans, and you're there to go pay them off. You all should have learned enough about MCA funding. I'm sorry, wellness, about the wellness program to be able to hold a conversation about it now. Okay? You should be able to hold a conversation about that. But you're going to go in from a totally different angle than you were. I'm just giving you different angles. You're going to go in from a totally different angle. I gave you the angle as a compliance agent. I'm now giving you an angle as the MCA bailout person, right? So same thing, same company, same way. You're still getting into the same location. It's a lot of ways to get. It's a lot of ways to get to downtown. You can take the expressway. You can go to underground pathways. You can take the tunnels, the bridge. There's a lot of different ways. You can take the street. You can take the long ways. A lot of different ways. And so this is what we're studying with fishing. Okay? We're fishing. Our next training, we're going to talk about more fishing. Because that's the mindset that you have to be in when you're speaking of increasing your numbers and closing deals. How do I fish and get people to get on my hook? How do I get people on my hook? Okay? So this combination delivers both logic and emotion. The business wins and the people wins. Immediate cash flow relief, ongoing financial benefits, no net cost, IRS credit advantage, and there's a residual income for you. To make, even if on a smaller scale, to make $400 or $500 off of one client, you keep doing it, right? You get to 4 or 5, 6, 7, and before you know it, you're at 5,000, 6,000, you're at $10,000 a month because you're just signing up customers. You're just signing up customers to bail them out because your focus now is here. What if you just had your focus? And I was speaking with someone, I forgot who it was, that was saying they just need to find their niche with G2, exactly where they fit in the best. Okay, and this is just another angle and another strategy that you can use. Okay, this is another angle and a strategy that you can use. We're not asking. This is a combo package, right? We're not asking. I want everybody to start getting in that mindset. We're not asking. You have specific industries under this program that you can target, that if you know that they have MCA loans, how many people, it's almost like you picking up the phone, me as a guy, because I know you guys can understand this analogy, picking up the phone and me calling some young lady and say, hey, I want to pay all your bills. Can I pay your bills for you?
Careful, sir.
He said, what?
Said, be careful now.
I said
I'll
it was
send them.
I said it was an analogy. But you get the analogy, right? Who's going to tell you no? Right? Who's going to tell you no? Let me pay this bill for you. It doesn't matter. Just say I want to pay a bill for it. This is a combination. This is a no-brainer. Especially when their credit requirement is not required. But you can go in so many different directions with this, right? So what if, okay, after you bail them out, you got them in a better position, you gave them the wellness program, got them all set up, but they still need money for expansion, they need money for growth, they need money to do these things, and you know we have this funding for them. We have the funding for them. But what if they do have a credit issue? You pivot to your credit program. Anything that you do with them now, from the bailout to the savings, anything from there, they're going to trust your advice. They're going to trust your advice, okay? They're not going to question it because of what you've already done. Okay? So the MCA bailout, that gets the client's attention. The Wellness Plus keeps it because it's ongoing. They get that money every year now. They see the savings, and you guys do know that the savings is realized immediately on the next payroll run. Congratulations to you, Larry, for closing your deal on your wellness and getting them onboarded.
Thank you, sir. Thank you, thank you, thank you.
Congratulations to you. Now you're going to be receiving a monthly residual check every month from that one deal. You were persistent. You were diligent in setting up the meetings and making sure that everyone was there. And you made sure that we were prepared for your client. And your client was prepared for us. And now they close. So salute to you, wings up. Keep up the good job and keep up good work and do it again.
Thank you again, sir. Thanks for all the training.
No doubt. Okay? So the MCA bailout gets the client's attention. The Wellness Plus keeps it. One brings relief, the other brings retention. Together, they create a solution that makes sense emotionally, financially, and practically. Okay? The solution makes sense emotionally, financially, and it's practical, right? And so that's the kind of offer that sells itself. You don't have to sell that. You don't have to sell that. It sells itself. Okay? You don't have to sell it. So the G2 Global Impact. So for for the G2 reps, the impact here is what? It gives you high value client conversations. It gives you recurring income with every close. It gives you stronger customer retention and referrals. What does it work? What does it mean to us? It expands our market dominance in the financial and employee benefit sectors. It positions our company as a business relief and wellness solution provider. And it creates scalable opportunity for independent agencies nationwide under this program. Think about this program if this was a target. I know I'm over my time, guys. I'm almost done. But think about this as if we just targeted, because we're still working toward their wellness. But if our hook to get in is to pay off these MCA loans, right? What if they didn't qualify for some reason for the MCA payoff loan? What reasons would they not qualify? Well, being currently not current. You have to be current under this program. So if you're not current on this program, then you don't qualify for the bailout part, but you still qualify for the wellness part. We can still do something further. We're in front of the client now. We got to learn we got to know how to pivot and use this client now. We're in front of them. We got them on the hook. We know how many employees they have. We know they need cash. They took out an MCA loan. We know they probably don't have the best credit situation. Why? Because they took out an MCA loan. See, these things tell us all type of things right away. Okay? Or they was in some type of emergency, okay, that they had to hurry up and take out a loan and they were short on cash. Whatever the case may be, your wellness program still addresses those concerns, whether it be savings, retention, expansion, or what have you. The wellness program, which is the line, still addresses those concerns. Okay? I'm almost done, guys. So I just want you to think about, I want you to think about what's next with them, okay? This is just a way to get them on the hook. Once you got that fish on your hook, all you all that's cookers, once you got that fish on the hook and you reel that fish in, you now get to decide what you're going to do with that fish. Now, if you mow little, you're probably going to be healthy and you might grill the fish. But if you Moe Cannon, I'm a fry the fish. And I'm a fry it crispy with some spaghetti.
Right.
With spaghetti in the salad. So, but the point is, no matter what you do, once you have the fish on the hook, you get to make the decision on what you do with it now, right? So you want to put it in the wellness program. You want to put it in the credit program. You want to do some construction, funding for them, business. You have to see where they stand because you have them on the hook now. You have their ear, and you were able to grab their ear by way of the MCA bailout program, which is the hook. Okay, that's the hook. So this training hopefully gives you a structure the hook, line, and close, it gives you a framework and a structure on how your thought process as a sales professional should operate. You should have the hook, the line, the close. We're going to use MCA loan bailout. We're going to add the wellness to it. We close. Any questions? Any comments?
Mo, of course, this is Trudy. I have a question.
Hey, Trudy.
How you doing?
Good. How are you?
Okay. Well, actually, I have two questions. Are you saying that we need to go out and find these people who may have the MCA loans? That is something that we're going to do.
That's something that you guys are going to do. I'm going to give you the flyers and things like that. But I'm also doing a digital marketing campaign on the back
Mm-hmm.
end as well, which is going to actually get us in front of clients as well, and we'll be giving out and dishing out those leads. So it's going to be twofold.
Okay, because I was wondering how willing would somebody be to tell someone that they don't know that they have an MCA loan?
Yeah, the same willing they would be to
Same
tell.
answer.
Yeah, same, yeah.
Just ask.
Yeah, just ask. Yeah.
I mean, you can ask, but I'm saying how willing. I mean, because if I had an MCA loan and I didn't know you, I
Mm-hmm.
might not tell you that because I might not want you to know that I have
But
bad
why not?
credit or I was in a
Yeah.
position of, you
So
know,
okay,
stress.
let's rock with that then. Okay, let's rock with that scenario, you all. All right. So in that same thought and that mindset, right? So say that someone says, "Well, I don't want to let anybody know that I have, bad credit." All right. So these people, number one, are already in some type of distress, right, Trudy? They're in some type of distress. It's
Correct.
okay. So whether it's financial and credit, because they have credit challenges and they're taking out MCA loans, that there's some type of distress there. Okay.
Mm-hmm.
So if you're drowning in the ocean, Trudy, and you're fighting and you're distressed in the ocean, and I come with a life jacket or a life preserver and throw it
I'm gonna
in,
grab it.
you're
I'm gonna
gonna
grab
grab
it.
it. Your natural instinct
Yep.
is going to grab it because you want to be saved. Nobody's
Right.
going to tell you, no, let me drown unless you're trying to commit suicide,
Of course. Yeah.
right?
Right.
Unless you're trying to commit suicide, you're going to grab hold to the life raft, and that's what this is.
Okay.
That's what this is. So you're throwing them a life preserver, and you're
Mm-hmm.
saying, hey, let me get you out of this rat race.
Situation. Yeah.
That's correct. Let me get you out of this
Okay.
rat race. Okay. All right. So
Okay,
that's what this is.
I think it's great. I think
Yeah.
it's great what you guys are doing. It makes sense. I just, want to know, how do I get to those people that I need to get to? How do I
Well,
find them? How
you
do
know,
I?
this is where you take the flyers and the information and the videos. I've got a video that we will share as well. Let me see if I can put that on there. The training. Let me see. Hold on, y'all. G, are you there? Anything you want to add to this? While I'm looking for this, anything?
No, I'm here and you're on your own. Just kidding. I was just working on a CRM, so
That's okay.
I don't have too much to say. The MCA product doesn't necessarily have to mean that you have bad credit, although they fund bad credit. Some people have good credit, but they need money fast, or they don't, they can't wait like here's an example. So right now the government's shut down. So there's no SBA loans going out. So people that need money, they might be forced to take an MCA because they need capital. Some people take it, or some businesses take it because, they've got a container of merchandise on the water. They need to pay the manufacturer for that container, but they're not going to get paid until they receive the product and are able to sell it to, whatever customer they sell it to. So they need that money to bridge the gap. All that's to say that it doesn't necessarily mean they have bad credit. Some people just get the MCAs because they're easy and they're fast.
That's right.
And then you get stuck in this cycle of paying for them because I'm not
Sure, they got
ashamed
high
to.
interest rates.
Crazy.
Yeah, they have really high interest rates.
Yeah.
They go from anywhere. They're not APR. So these aren't even technically loans, they're advances. So they run on a factor. So anywhere from a 1.20 to a 1.50, if you could look at that as simple interest. So anywhere between 20 cents on the dollar to 50 cents on the dollar, which, it means 20 to 50%, right? Short term, maybe they're only, 6 to maybe 15 months, and the payments are usually daily or weekly. But the requirements are a lot less to receive one. So it doesn't necessarily mean that they have bad credit. And then, I'm not afraid to ashamed to say it, but if you've like me in the past have ever taken out a payday loan, right? You go into a payday loan place and I don't know, it's different in every state, but in California they would give you $200, and then you would come back the next week and give them $250, which if you look at the APR on that's like insane. But when you would come back in 2 weeks with your $250, they would say, "Hey, do you want another one?" And you'd be like, "What do you mean?" And they would give you your $200 back, and you'd walk out of there. You'd leave your 50, and they say, "Yeah, just bring 250 next week." And you walk out of there feeling like, "Wow, I got my money. I got another $200, even though it's your own money. They just gave it back to you." Well, the same thing with an MCA. When you get to around the halfway point, right? Let's say you have a $50,000 MCA and it's a 12-month term. When you get around that 6-month mark and you paid it halfway down, basically, they say, "Hey, you've been such a great customer. Do you want more money?" So then they go and buy off the remaining half and then net you the half you just paid, which what does that do? It gives you your own money back, but it keeps you in the loan. Constant renewal cycle. And so then you need these MCAs because businesses operate on cash flow. That's like the lifeblood of any business. You need these MCAs in order to continue to maintain your business because you're paying on them weekly and it's eating into your cash flow and your bottom line. But then all of a sudden, someone comes back to you, even though you're going to have to pay them back, and says, "Hey, do you want another $25,000 cash injection?" It's very difficult to say no to that. And I would say that a lot of businesses that are struggling are essentially using MCA money to patch up, bloody wounds. And then once the blood soaks through, they get some more money and patch it up. And it just is constant cycle. So getting people out of those loans is pretty powerful. And one of the things that you'll see a lot of is you'll see people talking about consolidating MCAs. And you also see people talking about, debt settlement, settling the MCAs out. This is neither of those things. So nobody's offering this. No one's taking an MCA and paying it off, right? Because that's a really, really great advantage because now this company's come in, our product has come in, paid off the MCA. So now you have this great relationship with an MCA company. Not to say that you would want to go back to an MCA or not, but you definitely could down the road get better rates because you have a positive experience, even, because it just got paid off. Now you turn a weekly payment into a monthly payment. You turn a term that was maybe only 12 months to a couple of years. and you'll also net some money on top of that. You'll net some money back. So it's a good thing. As far as reaching out within your network, you might find that social media is going to be your best bet here. I mean, how many people are going to go around and be like, "Hey, do you have an MCA? Hey, do you have an MCA?" to all their friends? You might find social media to be your best friend there to say like, "Hey, literally, are you stuck in a high interest rate MCA?" Anyone that sees the word MCA that has an MCA is going to read your message or whatever. Anyway, I told Mo I had nothing to say, so sorry.
May I ask, would a gas station with the taquerias and all that be qualify for this MCA? And also, if they have like 3 employees, would it still be acceptable? Or does it have to be 5?
I don't, Mo, we're requiring them to have that many employees?
No, that's just me. Yeah,
Yeah, he's using that as bait.
yeah. I mean, as long as they have a minimum of 3 employees, that's what's going to qualify them.
Yeah. Um,
So it would
and
be
that's fine.
applicable to like convenience stores,
Really,
uh,
it's
you
applicable
know,
to any business.
Yeah, any business.
Uh,
okay.
yeah, you're not selling a merchant cash advance. You're going back and selling another product to people who already have a merchant cash advance. So, a lot of restaurants, for example, a lot of restaurants have merchant cash advances. That's a pretty popular industry. Any kind of business that has a consistent amount of cash flow coming in daily but isn't necessarily profitable. Unlike a traditional loan, you don't really have to be profitable in order to qualify for an MCA, which sounds crazy, except that it's all based on cash flow. So that's why they don't care about credit, because all they care about is that the bank account is receiving positive numbers every month or every day, rather, in order to uh, basically in order for the lender to take their payment. So they don't care if you are profitable at the end of the year. It doesn't matter to them as long as there's cash flow coming into the bank account on a daily basis. So a restaurant or a convenience store or any kind of business like that would definitely qualify. What they don't like are businesses that maybe only get 1 or 2 deposits a month, even if those deposits are large. For example, let's say it's like a doctor's office and they get paid out monthly by insurance, right? And the insurance payments come in on the 1st and the 15th, and they're huge. They're 75,000 and 100,000. That actually would be harder to qualify for an MCA than someone who's getting daily, deposits, even at a much lower volume, because the way that the MCA company looks at it is, hey, if I go to take my weekly payment on, the 12th, they're only getting 2 deposits a month. If anything happens to 1 or 2 of those deposits, I'm screwed. Whereas if they're getting constant deposits, the odds of all of their deposits not going through, are much less risk. So I would say look to businesses that are constantly getting transactions every day: restaurants, convenience stores, auto body. Any of those kind of places would be good. And essentially just say, hey, do you have any? Have you thought about taking any loans or anything for your business? They'll tell you, oh, we already have one. Most likely it's a merchant cash advance. So you say, oh, is it an MCA? And then the idea here is that we're trying to get them out of that product, offer them an alternative. We're not trying to sell them an MCA with this product.
Correct. Correct. We just
Fully, no, I acknowledge it's not selling. I was just asking if, and you clarified everything for me. So I greatly appreciate that. Thank you.
No worries. I could talk about MCAs all night. So
I have a
no
question.
problem.
go ahead.
Yeah. Um, um, yes. So my question, when you said like daily deposits, so I completely understand like a doctor's office. What about like an ambulance service? Somebody, um, like how many deposits would it be like daily 30 days day or 20 days? Like how many would be an ideal customer?
Well, I want to make a distinction here. Really,
Okay.
it doesn't matter to us at all. So it doesn't matter if it's one deposit, a million deposits, because we're not selling an MCA. So all we're looking for is a customer who has an MCA now, or at the moment. We don't care about any of that other stuff because we're getting. I was just making a comment about what
okay.
yeah,
Okay.
what they're looking for, so you know what to look for. The odds of a doctor's office having an MCA are much less likely than a bodega or whatever.
Got it. I understand. Okay, got it. Thank you.
Hey, okay, guys. So here's the video right here. Can you guys see my screen? What's on my screen?
Yes.
Yes.
Global Network.
Okay. So this is the MCA bailout video. Taking out a merchant cash advance recently. Can you hear it? Have you taken out a merchant cash advance recently? Are those daily or weekly payments eating away at your cash flow? What if you could wipe out that MCA loan completely and replace it with a lower fixed monthly payment starting this month? For many business owners, MCA loans start out as a quick fix but turn into a daily nightmare. High payments, short terms, and zero breathing room for your business to grow. Those daily debits can make it feel like you're working just to keep up and not to move forward. At G2 Global Network, we've launched an exclusive MCA loan bailout program that's designed to give business owners their freedom back. We'll pay off your MCA loan on your behalf and convert it into a low fixed monthly payment. And we'll stretch it out over 5 years with no prepayment penalties. That means no more daily drafts, no more stress, and no more balloon rates. Credit score is not a factor. Replace it daily, weekly payments with one low monthly payment. Up to 5-year fixed term with no prepayment penalties. Instant relief from high interest MCA debt. A chance to restore your cash flow and stabilize your business. Now, your eligibility requirements are simple. Have a minimum of $10,000 in MCA loan balances and at least 5 W-2 employees on the payroll. Don't let those daily MCA payments drain your business another day. Apply now and let G2 Global Network buy out your MCA loan once and for all. Click on the link below to complete your quick application, and let's get started on rebuilding your financial freedom today. At G2 Global Network, we're not just helping businesses survive, we're helping them thrive. Apply today and say goodbye to daily MCA payments for good. I will see each and every one of you all at the top. Okay. So,
how can we get that video?
Yeah, that's good.
Discord.
Great.
I'm gonna send that out to you. Go out. That'll be in Discord. Okay, you can just grab it, use it, put stuff like that on your LinkedIn, your social media. Once again, I am doing a digital marketing campaign, so that's gonna be on that campaign as well. So we'll get people coming in or calling in for deals. We'll start spreading some of that stuff out too. But you got to go out and promote. You got to promote, especially something like this. You got to promote it. Okay.
So on the flyer, Mo, we just attach our business card, right? Because we can't add our name to that flyer.
Yeah.
Phone number.
No, yeah, you just attach. So on the flyers, you're gonna put the flyers on your post with your contact information, your website. I'm sorry, not your website, your email address, things like that. Just attach it to your page. Have people to inbox you, email you, call you, things like that. I just took off the spaces for us being able to write in your name, stuff that looks tacky. So I didn't.
Right.
All right.
Okay.
All right. Okay.
Thank you.
You're welcome. All right. Let's see. Go ahead. I'm sorry.
Yeah, I just had a question. Are we able to get into the CRM so we can put our contacts into the system?
So we've got the CRM. We just have the CRM on hold right now.
Okay.
Yeah, only because people wasn't using it, so it wasn't being used. Okay.
Okay, thank you.
You're welcome. Anything else? Anyone else? All right, guys, we're like 30 minutes over the hour. Malik, do you have anything you want to share? Is he still on the call? Malik, you got anything you want to add to the call?
I was on mute. Sorry, guys. No, great call, Mo. A lot of great information. Thanks.
Okay. All right. No problem. Thank you.
Yeah, great talk.
All right. Thank you. Okay.
Thank you, Mo. Thank you, Gerald.
You're absolutely welcome. All right.
Thank you, everyone.
Wings up, y'all. Peace, love. Wings up.
Thank you,
wings up.
team.
Wings
night.
up.
All
Wings
right,
up.
thanks, Mo. Wings up.
Hey, Anthony, stay
Wings
on the
up.
call.
Have a good night.
Wings up. Anthony G and Larcia. Is G still here?
She is still here. Wait a minute. I think no.
Yeah.
No,
Gerald's still.
I'm here. Sorry, my
Yes,
kid was throwing a
Anthony.
ball. I had to go. What's up?
Yeah, can you stay on the call for me? Anthony G and Larcia.
Yep.
Good night, Miss Ophelia.
Okay, good night.
Good
Wings
night.
up.
Good night, everyone.
Good night, everyone.
Wings
Glad
up.
you got
Thanks.
on, man. Glad you got on. Wings up.
Okay, baby. Good night.